Guys, Keith at Crypto Bullseye. Out of all of the charts that I've been analyzing this morning, Polkadot is one of the ones that's making me most bullish, and I'm going to tell you exactly why. So let's talk bearish. Polkadot's just sweeped its low. It's put in new bear market lows, and it's just dropped a range, and it's dropped a range that it's been holding all the way back here since May 2022, 10th of May. So we've been in this range, and we've been in this range 1,156 days. We've dropped the range, we've swept the low. Guys, I'm going to show you one of the biggest bullish indicators on Polkadot over a higher time frame across the biggest range within the whole of the crypto market, guys. One of the biggest ones within the whole of the crypto market. And I'm going to show you exactly what that is, how you can play it, and a simple trick, how you can understand exactly what the range is over a period of time, add that to your stop loss, and give you an extra edge in the market, guys. That's the average true range. So this is going to be part of your self-development, guys. This is Polkadot, and this is why I'm so bullish. Right, okay, guys, so your 10 minutes of self-development starts here. Hopefully I'll get it in 10 minutes. You know, I ramble on sometimes, but I want to try and slow things down because I do want this to be part of your education and part of your development, because you don't understand, guys. The more that you look and the more that you understand, once you go into TradingView yourself, you'll start seeing these patterns, you'll start identifying things yourself, and you'll start working out how you can get an edge yourself. So this one's going to be about divergences, guys, and we're going to talk about the higher the time frame, the higher the conviction. So we're on the 3-day chart. Each one of these candles here represents 3 days of price action. So if you think the daily chart, that's got 3 days within this one candle. Now, the higher the time frame, the higher the conviction. We're going to be looking at divergences, and we're going to be looking at the RSI. And this is the thing that's getting me excited on Polkadot, because when you look back here, guys, you see one thing. We're putting in lows, we're putting in lower lows, we're putting in lower lows, and we're putting in lower lows. One thing's happening on the RSI here, guys. We're putting in higher lows. So we're putting in higher lows on the RSI, indicating that the buyers are there, where we're consistently putting in lower lows and lower lows on the actual chart. So the chart isn't telling the full picture. So we've brought in the RSI, the chart's not telling the full picture, and we understand that there's 1, 2, 3 big higher time frame divergences there. 1, 2, 3 big high time frame divergences. So we understand that there's buyers there on Polkadot. We understand that the chart's not telling us that there's buyers, but we've got a heads up because the RSI is telling us that. It is a powerful thing, guys, divergences. However, it is a higher time frame. Is it going to play out in the next hour, the next 2 hours, the next 3 hours? It could, guys, but probably not. You need to understand that this takes 3 days to play out. So the next candle and the candle after that, that's going to be nearly a week, guys. So we can zoom into the smaller time frame now that we know that the higher time frame is telling us that the bulls have actually been buying. People have been buying Polkadot. So let's get rid of this. Let's get rid of this. And we're going to zoom into the daily next. And we're going to need to understand and identify in the smaller time frame when the next move is likely to happen. So we've had a break on Polkadot in the short term. You've had a break, you've come back down, you've retested this level. You can see that this was support, goes back to support, support, support. This is the first area that we need to hold. That's $3.28. Now, if you look at this range, you can see one thing. We've got a Fibonacci here built in from this lower high, so it's a conservative one. But you can see how these levels are being respected. So you've got your 236 and you've got your 382. 236 is getting bounces, your 382 is getting bounces when it's above its support, when it's below its resistance. So that gives you an understanding where the next big barrier of resistance is going to be. And it's going to be the 236. That's $7.89. So how do you play this? What happens if it goes wrong? Because it is a probabilities game, guys. You need to understand that. Sometimes you win, sometimes you lose. The aim of the game is to make sure that you win more than you lose, and your risk to reward is high enough for you to take advantage and get that edge in the market, guys. It's got to work for you. So what is the risk to reward on this trade, for example? Zoom out, you could see it is 9.97 to 1, nearly a 10 to 1 risk to reward. Now, how can you take advantage of this, and how does it go? What happens if it goes wrong? Because we've got 2 support zones here. Get rid of that. We've got 2 support zones here. Right, okay. One thing that can happen if it goes wrong, guys, you need to prepare for it to go wrong, and that's why you put stop losses in there. Where do you put your stop loss? You put your stop loss below the previous low. What happens if it comes back and sweeps the previous low? You get a wick to the downside, it takes out your stop loss, and then it does something like this, all the way down, then all the way back up. Now, this is a little trick that I wanted to show you guys, and it's something that I use in my trading, but it's something that I don't actually show on my channel very much, and it's quite an important thing, and it's called an ATR. Now, the ATR measures the average true range at any given time. So what I'm going to do is I'm going to bring that up. That's this at the bottom. You don't even need to look at this, guys. Just forget about that. You don't even need to look at it. Bring it right down. Just forget about that. The thing that you need to be looking at is this, the 0.13, 0.193. That is the average true range at the moment. Now, how can you use this to your advantage? Because you say put the stop loss below the previous low, but if it sweeps, guys, if it sweeps, then you can get stopped out. And like I say, it can run without you being in the trade. So what we do is we use the average true range below the previous swing. So we're 0.193 at the moment, 0.193. So we take the indicators off. And we understand that the range is 0.193. What does that mean? Get your ruler up, guys. This is pips. So we're going 0.193, and you can see on the side here, 0.08, 0.106, 0.193 we want. That is the average true range at the moment on the chart. So that gives you the wiggle room. We're nearly there, actually, aren't we, guys? When you look, nearly there, 0.193. So some traders use 0.193 or the average true range on top of the previous low to give them the wiggle room, understanding that that's the range of the chart and that gives them advantage. Some traders use 1.5 of their ATR. Some use 2 of the ATR. So if you're using 1.93, call it 1.2. Then if you're using 1.5, you would bring that down to 0.3. You can see it on here, guys. So that's how you can use that to your advantage. So you need to bring this down, understanding that the true range of this, if it comes back down and sweeps the low, you're going to have enough wiggle room because we know that the buyers, we know what the average true range is, and we're giving ourselves that wiggle room. So it'd be difficult for the sellers to push past 0.193 below that previous low unless something drastic happened in the markets, guys. Unless from a fundamental perspective, Bitcoin crashed, rest of the markets crashed, then you need to look, you reassess and you reanalyze. But guess what, guys? That's what that's for. Stopped out, you come back to lower levels, you live to fight another day, and you've preserved your capital. So that's how I would play the Polkadot trade, guys. Hope you enjoyed the video. Let me know what you want next in the comments, and I'll see you guys in the next one.